It's Monday, the 7th of August, 2023. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories, big stories to get us going for the week in 5 minutes. Let's get going. Story number 1, major banks are cracking down on the amount of money that you can pay to cryptocurrency exchanges as a stoush brews about who should refund victims of scams.
Yeah, so the Commonwealth Bank has just released new terms and conditions saying customers may have their ability to pay crypto exchanges limited to no more than $10,000 per calendar month, total across all accounts. This kicked in on July 29 for new customers. Existing customers are being given 30 days notice. They're not restricting withdrawals from exchanges, though, I must add that. The Australian Competition Regulator found previously that $220 million was lost to scammers via crypto last year. More is expected to be lost this year. It probably isn't that surprising this is happening. Anyone keeping a close eye on crypto know that National Australia Bank, Westpac, ANZ and Commonwealth have been declining and delaying transactions made to high-risk exchanges over the past couple of months. Corporate regulator ASIC has been telling the banks to do more to protect customers, and there are calls on the banks to pay more in compensation to scam victims.
So, Sean, then is this an effort to avoid refunding customers from scams?
Well, yeah, I think so. Look, it's an interesting issue. In the UK, banks are being forced by the government to repay victims of scams unless the customer was negligent or making fraudulent claims. That's billions of dollars from the bottom line. In Australia, fewer than 5% of fraud and scam victims get refunded by major banks. Financial Services Minister Stephen Jones previously said the Australian government would do something that travels in the same direction as the UK. Some banks in the UK have been banning customers from sending any money to crypto exchanges due to a relatively high proportion turning out to be fraudulent. Good one to wait and see on this one.
Yeah, absolutely. All right, on to story number 2 now. Sean, the federal government has responded to the PwC scandal by increasing fines 100-fold, removing secrecy rules, hampering the tax office, and giving regulators more power.
Treasury will also undertake a 2-year review of the regulation of all professional firms. We're talking lawyers, accountants, architects, the whole lot. As part of changes unveiled yesterday by Treasurer Jim Chalmers, penalties could rise to as much as $780 million under the changes. Legislation will be introduced later this year to give the Tax Practitioners Board more disciplinary options, power to protect whistleblowers, and extra time for investigations. So far, this scandal's been all about PwC, but its tentacles are now reaching into all areas of the professions.
Oh, tentacles. Great image, Sean.
Thank you.
On to story number 3, the housing market has continued to soften in major capital cities, with weekend auction results suggesting there's maybe a little bit of buyer nervousness out there.
It certainly seems that the housing market is cooling just a bit. I mean, prices are still rising, but not like they were even a few weeks ago. Clearance rates for the weekend's auctions dropped below 70% for the first time in 5 months in Sydney, according to Core Logic data. More than 700 homes went up for auction. That was about 6% lower than the week before. In Melbourne, the clearance rate held above 70%, but there were 12% fewer homes in the market. Now, when you have fewer homes in the market, you probably don't expect clearance rates to fall, but that's what is happening, certainly in Sydney. With the outlook for interest rates still a little uncertain, it's very possible some buyers are just getting a bit jittery.
Sean, story number 4, the FIFA Women's World Cup has been... It's been kicking goals, really.
Nice.
Oh, yeah, nice. Oh, yeah, I suppose it's not too bad. Really been for Australian and also for global media businesses. It's been a success all round, hasn't it?
Sure has. More than 1.7 million tickets for the games were sold by last Friday, beating all other Women's World Cups and well above the 1.5 million ticket sales hoped for. The Matildas' final group game against Canada last Monday was Seven's most watched program of the year with 4.7 million viewers. That includes 7+. Over 8 million people have now watched the coverage on broadcast, live to air, with another 1.1 million streaming on 7+. It's now less than 2 weeks until the World Cup final, which is being held in Sydney, but there has actually been some kickback over upcoming local broadcasts. Fans will now need an Optus Sport subscription to see all of the next round of 16 matches, with only half to be shown on free-to-air. Mind you, of course, 7 is still airing the Matildas versus Denmark tonight. Go the Matildas.
All right, last one. Story number 5, Sean. Warren Buffett, the Oracle of Omaha, is doubling down on his strategy despite the US losing its AAA rating, and with good reason. Berkshire Hathaway's cash and investments hit a near all-time high, $147 billion US dollars at the end of Q2.
Yes, during that June quarter, it increased holdings by about 17 billion US dollars. Now, its all-time record's $149 billion. At $147 billion, it's very close. $120 billion or so are invested in short-term treasury bills. Basically, they're liquid assets. You can get that money and spend it. Last week, Buffett was interviewed by CNBC saying his company's investment strategy would stay solid. He still wants to buy more US treasuries, with the only question in mind being whether they're 6-month investments or 3-month investments. Anyway, he's doing very well for himself, Warren Buffett.
He certainly is. All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Monday, the 7th of August, 2023. Remember to hit follow on the podcast. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed Business News wherever you listen to podcasts. That comes with a bunch of interviews as well. Today's interview was a fantastic one for investors looking at companies in Australia, Asia, Europe, and the US as well. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.